So Edward, let's bring you in here from a Carlyle Group perspective. I was watching an interview in 2013 where you were speaking about your fund of, at that stage you were talking about $600 million, but you corrected me a short while ago and said it's now $675 million. And the point that you made, which really resonated with me, because a minute ago I was telling you about the high growth figures in Africa. The point you made is that there have been many, many academic studies that GDP growth does not necessarily translate into high investment returns. It's about the price that you pay for the company and whether that company itself can grow. So tell us about your African experience, sir.
Good. Briefly, we're a global investment firm. I wouldn't say we qualify as having a philanthropic approach. I mean, we're not against that, but we're basically looking for investment returns. As a firm, it's very important for us to have a strategic foothold in Africa. I mean, everybody's aware of the demographics, the rise of the middle class, the growth of the economy. So that, for us, is a strategic imperative. Personally, I've been quite involved in Africa through Power Africa, where I've served on a partnership committee with USAID, and I was on the President's Council for Doing Business in Africa, where we just made a trip to Rwanda and to Nigeria, the idea being the U.S. government trying to be an interface between Africa and the U.S. business community, and we've made quite a bit of progress there. I'll just mention 3 or 4 quick things. Raising money in the U.S. for Africa is not easy. We're very early in the process. We found much more interest among families and high net worth individuals than we did in institutions. So it's still quite early for institutional commitments. Secondly, the opportunities there, you have to almost divide them into 2 categories. One is what I would call the infrastructure, the large projects, which basically the private sector cannot finance. I mean, you're really going to need government intervention, support, risk mitigation, et cetera. And they just don't qualify based on the duration, the characteristics of the deal, returns. We are starting to see globally some infrastructure funds formed that will do this type of thing. What we have found in terms of the opportunities is that we can't transport the U.S. model of private equity to Africa. The real opportunities at this stage are in the smaller companies, the growth situations, what might be called, one step up from venture capital, and also the need for debt. I mean, in some ways, debt financing is almost attractive as equity, and it's becoming more pronounced given the pressure the banks are under. Our experience has been a learning and difficult situation exacerbated by 1, the currency, and 2, the commodity price change. So we've gone very slowly. We still see a lot of opportunities there, but has been a very challenging environment. And then when you layer that across dealing with 47 or 54 countries, for private equity in our situation, there's only 5 or 6 countries that today really lend themselves to our entry.
You can't stop there. 5 or 6 countries that lend themselves to your interest. Care to share?
2 on the panel. 2
I'll let
on the
you,
panel.
Yeah. We went to Rwanda, it would be Nigeria, it would be Ghana, it would be Kenya. I mean, you know them as well. Institutional investors look at South Africa as a separate market from sub-Saharan Africa. It's a much more mature market, it's much more institutionalized, especially Londoners have been there for years. So I think you have to divide the 2 up.
Currency volatility we're going to touch on. So Minister Gatete, I'm coming to you in a moment. Edward.
I think there's no doubt that the continent has hit some headwinds here short term, which are going to push out some of the growth prospects. Currency, political instability, dependence on natural resource, some other problems when doing business there. But I think we've touched on what the major issues, and they're all large, they're structural. Infrastructure, reasonable budgets that are dependent on slightly lower oil prices, less dependence on natural resource and development of financial markets, and more of a regionalization kind of approach, which will make it much easier to do business in Africa.
Doing business in Africa. You can't afford to be without Africa Investor.